If you had 1 million, you probably need 2 more to buy a property here in Vancouver. Regardless, we're talking about the new report from mortgage professionals in Canada. Katy Mackenzie, mortgage professional, joining us. The 83-page report you have gone through.
I have. You
have the Coles notes for us, thankfully. What was the key revelation that just came out looking back at 2018?
Well, it's the annual report from our Mortgage Professionals Association, created by Will Dunning, who is an economist. So there is a lot of statistical information in there. But one of the key messages that comes out of it and continues to be a part of our industry daily conversation is that the fact that the government stress test is stifling the housing market. It is hard for millennials, young couples to get into the housing market, and specifically, most notably, as we live in Vancouver, the Vancouver market.
And there are suggestions on how to change it. So the current stress test of the impact, what did we see in 2018, and what are the suggestions on how to adjust it so these people can get into the market?
Yeah, so there's been a number of rule changes over the past few years. Most recently, of January of 2018, they implemented a stress test rule by where if you have more than 20% down, you need to qualify at the greater of their stress test rate, which currently is 5.34, or your mortgage rate plus 2%. So as an example, if your mortgage rate is 3.75, you're actually qualifying at a rate 2% higher than that right now, which makes it basically 20% harder to get in. Reduces your affordability by 20%.
And the suggestion?
Well, the stress test rate of 2% doesn't take into account the fact that over a period of your mortgage term, say 5 years, your income increases, you pay down your mortgage with regular payments or prepayments, which 1/3 of Canadians do. And so they're recommending in the report that a rate of 0.75% would be better. It would take all the variables into account, not just the fact that rates will be higher, most likely, when you go to renew your mortgage.
And when we look at the idea of just mortgages and affordability, mortgage defaults, what were trends that we saw in 2018?
Well, in the report, they're saying that they're actually quite low, surprisingly. I think it was 0.24%, so 1 in 425 people, I think it was. Quite low, which goes contrary to what you might think based on what you see and you hear in media reporting.
And number one cause for these defaults?
Job loss. Yeah, so you're not going to walk away from your home. It's your home. You live in it. You have your family in it, new baby in it. So it's more important that the stress test rules include these types of variables.
What's the likelihood we would see a change to adjust the current stress test as it is so the younger demographic can get into this market?
Very strong with an association like we have. They advocate on behalf of our industry, so they're our voice and they're your voice as a client. They've made our voice heard and other changes implemented, and I know the finance minister is speaking about it specifically to helping millennials get into the mortgage market. So things like bringing back a 30-year amortization on insured mortgages, possibly for first-time homebuyers. So, you know, these things are in constant discussion from our association, which makes it very, very inevitable that we could see change.
Well, I think change is good, so people can start planning, start investing, and I guess just final commentary on, we've seen the trends in 2018, projections for 2019 that came out of this report.
Well, everyone thinks doom and gloom, market's going into the hole, which it's not. It's definitely slowed, but you know, January in particular for me has been quite busy. We still have clients that are able to buy. We're still seeing generational wealth pass, Bank of Mom and Dad. So people are still buying, right? As our older generations sell their larger pieces of real estate and they've owned possibly for decades, there is that generational wealth which is enabling people to get in. 52% of savings or down payments are still coming from personal savings. So it's people are saving. It's taking them longer to get there, but they're doing what they need to do, and they're asking, how do I get in? So they're planning more in advance. So it's going to slow, but not to the extent I think people are expecting.
Well, this is interesting to hear. 83-page report, courtesy of Katy Mackenzie this morning. Thanks so much for coming by.
Pleasure. Thank you.
There you see MackenzieMortgage.com for more information. Russ and Kate, you hear that? Bank of Dad. The kids are going to be still tapping in there.
Bank of Dad. I'm familiar with that one, yeah. And I'll also say to yourself and Katy that I, took the services of a mortgage broker years ago, and I'm so happy. The education that I got from that, it's really helped along the way. So great advice.
Yes. Thanks, Katy.
Thank you for that, Katy. I will look at your weather report.